time that they would win the lion's share of the online retail market. And that was absolutely right. I think Tesla has already passed through that phase of its life. It did invest aggressively, and it has on four metrics. It is leading the charge, so to speak. So battery technology costs lower than anyone else's out there and will remain lower. Artificial intelligence chip, it designed its own. No one else has designed its own chip. This is analogous to Apple in the day. Cellular companies, Nokia, Ericsson, and Motorola, didn't see the future. Apple did, and yet it couldn't get Qualcomm or Intel to move quickly enough. It had to design its own chip. And of course, now Apple basically accounts for the lion's share of all the profits from smartphones in the world. We think this is going to happen also with Tesla. Maybe not worldwide, because we know China wants its own champion. But that AI chip that Tesla designed, our analyst said, was 4 years ahead of where Invitae was at the time, and this was a couple of years ago. They have more data collected than any other company by orders of magnitude, not just by any other company, but by all other companies out there, because the largest pool of data with the highest quality is going to win in the AI game. They have the largest pool of data. And finally, until very recently, Tesla was the only automobile manufacturer able to improve performance of its cars with over-the-air software updates. I got my Model 3 in 2018, never had a problem except a nail in the wheel, which they couldn't correct over the air, of course. Never a problem. So what they've done is extraordinary, and I think this is their market to lose. I think they're in a very, very different place also. We're not in the tech and telecom bust. We are 20 years later. All of the seeds for what is happening now were planted back then. Now they're coming to fruition.
Tesla off the session lows, down 4.8%. Cathie, if you would, stay with us, because we're going to take a quick break, and we have a lot to hit to when we come back, including crypto. I know you're a fan, and some of your other holdings we saw right there on the wall, like Palantir and Square. Stay with us here on Closing Bell. Dow's up 472. We'll be right back with Cathie Wood.
All right, so Cathie Wood's going to talk about more about they're going to talk more about Bitcoin and Palantir. So let's go ahead and recap. Sorry about the loud typing. I muted my mic after someone brought it up. I was just taking notes so I can recap everything that she's saying in case you guys missed it. So while I wait for commercial, I'll go ahead and talk about what she recapped in case there's a lot of people who came here for, yeah, sorry about the loud mechanical keyboard. I'm a professional video gamer. I play video games for a living and make money off of that. So I have to have a gaming keyboard. Okay, so let's talk about all the notes I took during this. So she says ARK went through a similar situation that they are going now 4 years ago, back in 2016 when President Trump first took the office, where they had a huge sell-off of what was going on of all the companies they were invested in. And she says right now the stock market is transitioned to value stocks, and we actually notice it. Like companies like J.P. Morgan, Citi, Wells Fargo, Charles Schwab, and Goldman Sachs. All their stocks are going up because those are value plays. You see hotel companies, cruise line companies are all the money shifting from tech into value plays. And she says, that's okay. That's good. Even though they're all selling out the stocks she owns, she says it's better to broaden the bull market where all the different markets are doing well instead of just one focus sector like the tech. Because in the dot-com bubble, everyone was only putting their money in tech companies. Anything with a dot-com, that's what caused that big bubble to disperse. And she says this is not a market sell-off or correction or a crash like the dot-com bubble, because the market is not selling. They're buying different places, value stocks. So therefore, it's broadening it, and that will be good for ARK Invest and all the companies that ARK Invest is doing for the long term. So let's talk about what she thinks about Tesla now that she says ARK is fine because this is good in long term. Right now, she's like buying the dip for ARK. Okay, so Tesla. Right now, She thought in 2018 Tesla was actually going to lose market share in the EV sector as time went on. In fact, that's quite opposite. Tesla is gaining market share in the EV space, 80% in the US, and they're gaining market shares in different sector. It's not as strong as in the US, but they are still gaining market share. So Tesla is outperforming the sales percentage in what ARK initially thought about it. On top of that, she believes Tesla is going to be best for autonomy. That they're leading the market in autonomy and robotaxis where it's at. Personally, I disagree. I think Tesla has a better play at energy business with their battery storage, with their solar. I think that's the place to get. And there's actually confirmation from Elon Musk showing that they're actually leading in the EV space right here. This is his Twitter. Let's go ahead and go to his Twitter. He tweeted a bunch this past weekend. So this was March 6th. During the weekend, he says, if you want Tesla full self-driving download beta to your car, let us know about doubling the beta program size 8.2 and 10x 8.3. And he says, due to high level demand of full self-driving, adding download beta to service. So he's expanding the new rewrite. So it's showing that they're ready to expand it, which gets them closer to autonomy. Here we go. Cathie Wood's back.
The IRS taxes Bitcoin as property, but I don't think that's the reason for this correlation. It just so happens it's that. So we think that as it becomes a better accepted new asset class, and we are seeing institutional movement into the space, and we're seeing the diversification of balance sheets from cash into Bitcoin, we do think it will behave. Actually, I would say more like the fixed income markets, believe it or not. If you think about bonds from this level, you know, this idea of a 60-40 balanced portfolio is a bit problematic. We've been through a 40-year bull market in bonds. We would not be surprised to see this new asset class become a part of those percentages, maybe 60 equity, 20-20. So I actually think that might be the biggest surprise here.
I wanted to ask about fintech as well. I know you're a big believer there, and I wondered whether you look at the incumbent financial companies and banks in a different light than perhaps you do the incumbent autos compared to Tesla, or the incumbent retailers compared to Amazon 10 or 20 years ago. Are any of the traditional banks, with all the investment they're putting into tech, whether it's Goldman with Marcus, Citi with their partnership with Google, or the investments the big banks have made into Zelle, whether any of those banks are investable as plays on fintech, or are they all going to get crushed like certain retailers and autos have been?
Well, it's interesting that you say that. We have often expressed a point of view that there's old DNA and new DNA. It's when the technology platforms shift, it's very hard for DNA to shift from old to new. That said, you've seen with Walmart, you're going to have a Walmart, a Target, a Costco. So you'll have maybe 2 or 3 mega banks. And yes, a lot of them are investing aggressively now, which is what they should be doing. But we do believe that the 2 of the biggest sectors that will be disrupted in the world today are the 2 that have been best performing this year: energy and financial services. So choose wisely and make sure you're on the right side of change. Make sure these companies are investing enough, have invested enough. So many companies simply leveraged up to buy back shares, and now they're facing this huge investment mandate. So make sure that you invest in those that will be the survivors. And we do think that the carnage is going to be pretty significant in both the energy and the financial services sector long term. Now, in a V-shaped recovery, and we think we're in a very strong recovery right now, they're going to do fine. They're going to do fine. And in fact, the yield curve is very wide by recent standards. So that should accrue to the benefit of financial services broadly. So we're not saying that this is a fake out short term, but we are saying long term, watch out.
Cathie, just back to your fund's performance just recently and what we've been seeing. How are you navigating these heavy first inflows and now outflows? And yes. my other questions are related to that is why are you selling liquid stocks for illiquid stocks in a downturn?
Well, it's part of our strategy. So in the coronavirus, we concentrated our portfolio towards our highest conviction names. So the flagship portfolio got down to 33 names. As the bull market extended, we added names. It's up to 55 names. Many of those names were much more liquid stocks. And so you're right, Sarah. When we get opportunities like this to invest in pure plays instead of more mature plays, still innovation, but more mature and not as pure play, we will move back into pure play. Those are the more volatile names, of course. And so we're getting great opportunities. And just to give you a sense of that, our minimum hurdle rate of return for any stock to enter our portfolio is 15% over a 5-year period. So that's a doubling over 5 years. Now consider the source, but given the very sharp pullback we have had here recently, nothing's changed from our point of view on our long-term projections. The only thing that's changed is the rate of return. So a 25% rate of return over 5 years. So we're becoming more and more optimistic about our portfolios in the sell-off.
We could go through a number of stocks that you like and that are all high interest on the street, from Palantir to Square. Why don't you give us, besides Tesla, which we know you're a big fan of and your conviction has increased there, which one you think is the most underappreciated name right now in your portfolio that you'd be looking to add positions to?
Well, we just went through this morning. Invitae in the molecular diagnostic space is probably one of the most important companies in the genomic revolution, and it is getting hammered. It's a company that has had historically small cash cushions, although they've rectified that with offerings, which is great. But it's investing aggressively to be the leader in the molecular diagnostic testing space. Many people, the disconnect for many people here is when they think of lab tests, they think of LabCorp and Quest Diagnostics, which are effectively very mature companies, commoditized, value stocks. And so it is a little bit like Tesla in the automobile industry. The new lab tests, which are going to be informed by artificial intelligence and big data and supercomputing power, are, we believe, in a winner-take-most market as we move into personalized medicine, much different from one test for all, although we'll see multi-cancer screening certainly in that realm. But we think the move towards personalized testing is going to give just a few companies the lion's share of the market, those companies with the most data, the highest quality data, and the best AI expertise.
Cathie, great to see you. Thanks so much for joining us today.
Thank you, Wilfred and Sarah, very much.
We've only got 9 minutes left of the session, and we are down 2.
Okay, so that was done with Cathie Wood. I can recap what she said in case you guys missed it or didn't fully kind of understand what she was trying to say. So I'm going back to where she says talking about Tesla before I go into Bitcoin, fintech, energy, and ARK Invest future. Okay, so I was leaving off with Tesla, Elon Musk expanding their autonomous program because they're very bullish. So she's saying Tesla is getting closer to full autonomy for the robo-taxi, which will be better than any of the competitors out there, and they're going to be first to market, which usually does the best. So she's fully bullish on Tesla in terms of the robo-taxi, and that's where the main money is. Okay, she also talks about Tesla is very similar to Apple back then, where Apple was innovating so fast that their supplier like Qualcomm and their chip makers, I think it was Intel, it was mainly Intel, that they couldn't keep up with Apple's demand for a better processing chip. So what did Apple did? They cut ties with Intel and built their own chip. It's very similar to what Tesla did with Nvidia. Nvidia could not keep up with Tesla's demand for full self-driving, so they cut ties with Nvidia and made their own hardware. I think they're at hardware 3.0 right now, and they're transitioning to 4.0 in sometime future. That it's 4 years ahead of what Nvidia could have done back then. So they're talking about how Tesla is like Apple of their innovation is so much better of their own product. So she's also kind of hinting that it's going to be better than the NIO's partnership with Nvidia with that four chip for their new full self-driving with LiDAR and other camera systems. So she's talking about that. And she says right now it's Tesla market to lose. Tesla is leading so much, it's basically the only person that can beat Tesla is Tesla themselves if they mess up poorly. Okay. Now let's talk about Bitcoin right here. Oh yeah, I forgot to talk about Tesla also are way ahead in their terms of manufacturing. That they're cutting costs of manufacturing so much and passing on to consumers, and therefore they'll get more market shares, which will beat up our competition. Where legacy automakers, that their margins get squeezed too much because Tesla keeps cutting the cost of everything they do in production and to the customers, that they're basically going to win more market shares. Okay. So let's go ahead and talk about what she says about Bitcoin. She says Bitcoin is not like a technology stock that you invest in. It's more of a fixed income. And she talks about how a lot of portfolio managers and people talk about the 60-40 split. 60% in stock and 40% in bonds. Just in case, let's say stocks doesn't do well, bonds will be the hedge against your stock investment. And that's 60-40. She's like, she hates that model. She hates a 60-40 split model. But she says she thinks the future is Bitcoin will be now part of the 60-40 split, where she says 60% will be in stocks, 20% in bonds, and 20% in Bitcoin, where it's going to be 60-20-20 split. So that's where she thinks the future is going to go in terms of general investing. Okay, so let's talk about fintech and energy sector, the oil sector. She says this is very similar to the old DNA versus new DNA energy. So where it's kind of like you have the big companies like Walmart, Costco, Target. Those are old companies trying to compete with Amazon, and they're finally investing a lot of money to compete with Amazon, and those companies will do well. Those are the three big traditional brick and mortar sale company that's going to be around, and they innovated enough to catch up with the new. And she said that's going to be very similar to the banking system and to the energy system. The fintech space is disrupting the traditional financial system, where most banks will fail and fall and get bankrupt and probably get absorbed by another big bank company. So she says, look for the 2 to 3 best banking companies that are able to adapt into the new fintech space and will be like the Apple, the Walmart, and the Costco against Amazon. So most likely, in my personal opinion, since I'm a heavy stakeholder in JP Morgan, I think they're the best one to do it because they invested billions of dollars into research of cryptocurrency and a stable currency to catch up with cryptocurrency. So she says, look at that. And she also says oil industry is going to be the same way as a fintech industry, similar to the what is it called? The commerce or the consumer cyclical industry. Look for the 2 to 3 best oil companies that can adapt to the changes to the way electricity is going or the way hydrogen is going, that they can adapt. So those are probably going to do well. The rest are going to die off. So if you're going to invest in any of those companies, look for the one that's best positioned to transform their old DNA technology into with the new. Okay, so let's go ahead and talk about ARK Invest. She also says the V-shape, we are currently in a V-shaped recovery right now, that right now the stock's going to go down after the broader market of all the value plays transitioning tech to value. The tech sector that got sold off are going to go right back up. It's going to be a big V-shaped recovery, similar to what happened in early 2020 in March, the big sell-off with the pandemic stay-at-home stock, all the market crash, and then tech sector went up like a V-shape. We're in a similar position right now where the market's selling off into recovery play, into value stocks, and the tech sector is going to go up. So this is a great buying opportunity for anyone who is hemorrhaging money in all these high-growth stocks. Okay. Now, let's talk about ARK. They ask, why are you selling liquid asset for non-liquid asset? And she says, right now, in these type of high volume plays, it's best to focus on companies that you have the strongest conviction on and sell off any of those more speculative. It's kind of like what a lot of investors, YouTube financial people says, like, hey, do your due diligence, find the company that you absolutely believe in, and kind of trim the position on all those speculative companies. For example, Tesla. I am strongly convicted in Tesla and believe they would dominate and they have so much growth potential. So I would trim companies that are not doing well that I don't have as strong conviction. Like, for example, I trimmed out of Hyliion, trimmed out of Workhorse, things of that nature like QuantumScape. So those type of companies that are that you don't have a strong conviction, that's what ARK is doing. They're focusing on the strong companies. And this is an opportunity for more mature companies to play stock. Now she says, what changed about ARK in the companies they are invested in? Well, they usually look for a company that gets added to the ARK Invest that's 15% over a 5-year period in terms of looking for a stock. Like, so they're going to gain 15% every 5 years. Every year for the next 5 years. She says the only difference now is the rate of return. That means they had originally high growth rates for it. Now, just the rate of return is not going to be as much as they anticipated since there's a sell-off. So that's what she says about it. But they are more optimistic about the ARK portfolio now than ever with this sell-off. And she was asked, what is the most underrated stock in their portfolio right now? Okay. And she says the most unappreciated stock right now is in the genomics sector, the ARK-G ETF, which is Invitae. And they are investing more because Invitae is different in how healthcare data works. And that Invitae has spent a lot of money investing in research improving their companies, which is what ARK really likes to do. That they appreciate it. So what Invitae is different compared to traditional. Geez, I just lost my notes here. Can you believe it? I was trying to switch tabs here and I lost my notes about this. Okay, I got it back up. So what Invitae is doing differently is that they absorb a lot more data. Yes, there's a lot of companies that has a lot of health data, but they do personal data. That means specific to the individual patient, not the whole broad spectrum of all patients. It's like, okay, your health information is the data we collect just on you. It's not going to be like a mass conglomerate. And that they do quality data. You can have a lot of different data, and it's just pointless data. The main thing is a lot of data, but they're quality data, and they provide, which is the best chance for Invitae to win. So they're bullish on Invitae, and they think that this huge sell-off right now is a good buying opportunity for what the company has potential in return. So let's take a look at Invitae. Hopefully I spelled that right. Invitae, NVTA. So Invitae is actually up 2%, but if you look at the broad sell-off for the past months, down 32%. Past 3 months, it's been down 35%. So it's been up over 100% year over year. In past 5 years, it's up 279. So if you look at the highs back in December 11 was $56. She says it's a good buying opportunity right now at $34. We'll see. Let's see where Tesla is at right now. This is another big company that they are investing in. Tesla had about 6% sell-off today. So you most likely see ARK will be buying more Tesla after this interview. They usually release a letter to their shareholders saying what stocks they bought. So those are the information Cathie Wood is going right now. Their portfolio is good. There is still a bull market right now. It's just being more broadened. It's not heavily focused on tech, so that would reduce the chance of being in a bubble where the bubble will pop into tech. Right now, it's just more like a good correction. So you look at Nasdaq; it's down about 9 to 12% depending on the day. So overall, that's more of a correction than an actual crash. So their portfolio would do good long run. So what I take away from all this, not just only listen to Cathie Wood, but my own due diligence, listen to Warren Buffett, and looking at the stock market in general, I think this is a great buying opportunity. Yes, in my retirement portfolio, I just made a video on it that I did. For my retirement, I focus on value plays. They're going to do good forever long term. They're good growth companies, dividend companies, aristocrat companies. You can see right here, I just made the video about I put $16,000 in my IRA account where I bought in, and then I'm going to use the rest of my traditional brokerage portfolio, buy all these tech stocks that are crashing at a good discount because in the long term, it's going to be a good value. So this is where I'm dollar cost averaging in. I mean, if you look at NEO right now, I think my two biggest position in EV companies is Tesla and NIO. NIO right now is at $35. If you look at it at the all-time highs back in February, it was at $62. So it's trading almost half of its price. So I like what NIO is. If you look at Tesla, let me see if I can pull up my Tesla portfolio. I don't want to pull up Tesla right now. Okay. Geez, look at that. I am down $12,000 today. Look at that. That's very painful to stomach, but I'm okay with that.